Okay, welcome to the TRG, guys. Let me just give the others a few minutes. So the plan for the day is basically we were doing a mock exam. Let me just double check if I have sent the paper to the Telegram group. Just give me a second. Okay, I think I haven't sent this particular paper, right? But if you had joined my batch 4 class, then this was the second mock paper that we did. I will share the questions on the TRG group as well. Okay, so in case there is somebody who didn't come for the mock, in case you want to follow it, I will share it on that as well. So the week before last, we finished off the first 15 MCQs. Okay, so the plan for the day is to finish the rest of the MCQs and to finish the MTQs as well. So basically to finish off the entire paper. Okay, so just give me a second. I will send the files to the Telegram group. Okay. So actually, let me send the answers as, I think it's better to not send the answers. The reason is because I have changed a few questions. Okay, so if somebody didn't listen to this lecture, they will get confused. So I'll stick to the questions. Answers will be there in the TRG. Okay. Yeah. Okay, so I think we can start. Since it's MCQs, even if you miss a question, you can always continue from the next. Okay. Right, so the 16th question says, extracts from these records from the last period are as follows. Okay, so production, the budgeted production was 1,925 units. Actual production happens to be 2,070 units. Okay. Variable production overhead costs, they're giving you the budget as well as the actual and labor hours worked, budget and actual is given. Now, the moment you see this question, guys, you can see they have clearly divided it into budget and actual. Okay, so more often than not, the moment you see this, you should realize that it's going to be a question to do with variances. Okay, because only in the variances chapter do we need, budgeted data separately, and it has to be clearly separate from the actual data. Okay. So requirement is, what is the variable production overhead efficiency variance? Okay. So I'll give you guys a minute, okay, to see if you have already done it. Just check what you've done. If not, I'll give you a heads up of how this question should be attempted. Okay. Now, variable production overhead, it had, as every variance, there were 3 headings you have to have: actual, actual at standard, and standard. So this is common for everybody. Okay. Now, when it came to the variable overhead variance, the difference between the actual and standard box, we called it the expenditure variance. They're not asking us that. Okay, they're not asking for expenditure. They are asking for the second variance, which is the difference between actual at standard and standard. So this variance. That's what they're asking. So in your exam, don't waste time trying to figure out this, okay? Maybe the information is there to do it, but you don't need it. What you need is just these 2 boxes, okay? So have a go, see if you can figure out what the efficiency variance should be. Okay, I've shared the, the equations with you, so that shouldn't be a problem. See if you can get the efficiency variance. And before you do it, exam technique, guys. Now, you can see that there are 4 different answers. Okay, now some people will say, if you don't know the answer, just select C. Okay, but you can be a little bit more rational than that. Okay, you can see there are 4 different answers. One is 1,656 adverse, 4,140 favorable, 3,726 adverse, 4,140 adverse, right? Now you can see this 4,140 is repeating 2 times. Now, whenever you have MCQs whenever you have similar answers, chances are that the real answer will be one of the similar answers. Okay. Now, even without doing the calculation, if I didn't know how to do this question, you know what I will guess? It will either be 4,140 favorable or 4,140 adverse, because they're giving me both to confuse me. Okay. And I can see that there are 1, 2, 3 adverses and only 1 favorable. Most of the time, answer will be adverse because it is among the similar answers. So if I didn't know how to do this, I will just choose 4,140 adverse. Just a logical guess. That's it. Okay, nothing much. Just guessing. So I'm telling you, in case you find yourself in a situation like that where you can't remember the equation or you did everything, you're not getting one of the answers, don't leave it blank. Okay, try something, right? Okay, give you about 3 minutes to 4 minutes. You can try it out and see. Good evening, Arundhati. Okay, so if you just joined, we started off with the 16th question. Okay, so I just asked them to try it out. So this was the second mock. Okay, so the second mock that we did, I have just shared the paper on the Telegram group as well. So if you want, you can access that. We'll be going through this and we will finish off this paper today, right? Okay, so let me start. If you guys are doing it, continue. Okay, I'm just going to start with the equations. Okay, so here it will be actual hours into the standard VOAR per hour. Since we don't need the other two, I'll just move it this way. Okay, and here we will have the standard hours for actual production into the same standard VOAR per hour. Okay. Right. So these are the two equations that we need. Okay. Right. So the easy part, let's fill it in quickly. Actual hours, right? So we know usually variable overheads, we tend to align it with labor hours and only do the calculation. Okay. Most questions will tell you that. In this case, they haven't told you, but obviously the only hours you have is labor hours. So you will have to settle for that. Okay. So this will be actual labor hours work, which is 8,280. Okay. Then we have to get the standard VOAR per hour. Now, the moment you see the word standard, understand that you have to use only budgeted data to get this figure. Standard VOAR, no. So don't even think of looking at the actual column, not necessary. Okay. So if you want to get the standard VOAR per hour, okay, what you need to do is, I'll type it here. Okay, you have to get the variable production overhead cost from the budgeted column, variable production overhead cost, which is 11,550, and divide that by the budgeted hours. So the budgeted hours that we have is only labor hours. Okay, so 11,550 divided by 5,775. Okay, so that will give you $2, which is the standard VOAR per hour. Okay, so how do we know how to calculate a VOAR? Just like a FOAR, fixed overhead absorption rate, a normal OAR, you will take the total overheads figure and divide it by some hours most of the time. Or it can be units, any appropriate base, but most of the time that will be hours. So here what are we doing? We're taking the total variable overheads and dividing it with the budgeted labor hours. Okay, so we have $2 here. Sorry. Okay. Then over here, we need to have standard hours for actual production. Now, the moment you see standard hours, you have to know this figure also has to come from the budgeted data. Okay, so let's get the standard hours next. Standard hours means how long should it take according to your budget? How long should it take to make one unit? Okay, so here I'm telling you the total labor hours that you can take is 5,775. But that is for 1,925 budgeted units. So if I want to know per unit, for one unit, how long can I take? Very simple, 5,775 divided by 1,925. Okay, so how many hours can I take? Let me get that figure also, it will be useful. I can take 3 hours per unit. Okay, so that will be here. Right. So standard hours is 3 for actual production. So we know actual production clearly given to us. It is 2070 units multiplied by the standard VOAR per hour, which is also calculated, which is $2. Okay, so that's about it. 3 into 2070 into 2, right? So now you can take totals. Here it will be 16,560. And here it will be 12,420. Okay, now just take the difference between the two figures. 16,560 minus 12,420. It's 4,140. Okay, now I have to decide, is this adverse or is it favorable, right? So look here, 12,420 comes from a box which starts, the heading is standard, meaning this is entirely budgeted data. Whereas this 16,560 comes from a box where you have a little bit of actual data also. Okay, so 12,420 is the budget, 16,560, we can consider that the actuals. Okay, so according to the budget, I'm supposed to spend 12,420. Actually, I have spent more. I have spent 16,560. Spending more is always bad. So this is a adverse variance for us. Okay, so the answer will be D, 4,140 adverse. The only way for you guys to tackle variances is to do more and more questions. You know, the more questions you do, the more confident you will get. Right? Take it down if you haven't. Those of you who have taken it down, you can try at the 17th one. Which two of the following relate to management accounts as opposed to financial accounts? Simple question. I think this is what we do at the very beginning of MA. Now, it's a good habit when, when you are copying something down. Okay, now it might be a little too late to know this. Usually when you're taking lectures, when you're copying something down, always, kind of give some sort of indication to show from where a number has come. Okay, because if not, when you're looking at it after about 2-3 weeks, you will wonder, okay, where did I get the 2? How did I get the 3? Those kind of questions will come. Right. So which two of the following characteristics relate to management accounts as opposed to financial accounts? Okay. They are used for external reporting. That's wrong. Okay, because we use financial accounts only for external reporting. We don't use management accounts. Whatever we create in management accounts, it remains within the organization, strictly within the organization. So A is wrong. There is no legal requirement to prepare them. That's true. If you want, you prepare management accounts. If you don't want, you don't prepare it. Nobody's going to question. Okay, it's good to prepare. You can plan if you prepare it well, but nobody really cares. Legally, nobody cares whether you prepare it or not. They are concerned only with past historic data. That's wrong. That is actually financial accounts. Okay, you take your income statements, your balance sheets, you name it, everything comes from past data. We don't use anything to do with the future when we are preparing any of the financial statements, right? But think about management accounts. For example, we have budgets. Okay, so budgets, how are they prepared? They're prepared for the future. So we consider what we think is going to happen in the future and prepare a futuristic plan. Okay, so management accounting is mostly to do with future planning as opposed to using historic data. Okay, so C is wrong. They include both financial and non-financial data. That's true. Okay, so we are concerned both for numbers as well as other non-financial information, quality, customer satisfaction, anything that we will consider important to us, we will include. Okay, so yes, correct. It is B and D, 2 and 4. Which are the following times taken to produce a batch of 100 units of product X have been recorded? What's the median time? That's a very easy question. Okay, I don't want to waste time with it. So if you have, a set of data like this, what you have to do is you have to first of all arrange it in either ascending or descending order. Better to stick to one. So let's just always go for ascending order, right? So the smallest number you have there is 8. Then you have 9. Then you have 11. You have a 12. You have a 14, a 15, a 17, a 21, a 24, and a 34. So what have I done? These numbers which they have jumbled up and put, I have arranged it in ascending order, small to big, right? So now if I were to get the median, I have to simply start crossing off numbers from either side. Okay, so take a pen. Okay, so 8 is gone, 34 is gone, 9 and 24, 11 and 21, 12 and 17. Okay, now in this case, the last two are remaining. Okay, so in this case, we can't just cancel both of them off. What we will do is we will add them both and divide them by 2. So 14 plus 15 divided by 2, that should give you 14.5. Not a dollar, no, it's a time. 14.5, which is C. Okay. 19 is saying Mistletoe Company has long-term loan liabilities of 253,400 and shareholders' funds of 511,000. What is Mistletoe's capital gearing ratio? They're asking you for the gearing ratio. Okay, so gearing ratio, we don't have to think too much. We know the equation. Gearing equals debt over debt plus equity. Okay, so have they given me the debt? They're saying long-term loan liabilities is 253,400 divided by, again, 253,400 plus equity, which is 511,000. Okay, so 253,400 divided by 253,400 plus 511,000. That should give you the gearing as 33.2%. So do we have that answer? Yeah, B. So that will be B. Correct. Okay, which of the following is not a feature of activity-based costing? Okay, so first of all, let me briefly explain what ABC is. I have explained this, I think, in the second ERG. Okay, so if you want an explanation, just have a look at it. I'll just brief you before we look at this question. So ABC is similar to absorption costing. Okay, what do we do in absorption costing? We have our fixed overheads. We try to absorb it into the price of the product. Okay, you have the fixed overheads. We try to absorb it into the price of the product. So what do we do? Okay, so the issue is we take all our fixed overheads and divide it by some base. Most of the time, this will be labor hours or it will be machine hours. It will be something to do with hours. Okay. Now the issue is if your production is not labor intensive, then it doesn't make sense for you to divide it with an hourly based figure. Okay, so in activity-based costing, what do we do? Instead of taking the total overheads, you take each individual overhead one by one. Okay, so for example, if there was a security guard, his salary was an overhead, you take that separately and decide what is causing this overhead to happen. Okay, sometimes it could be labor hours, but sometimes it could be some other factor, like maybe a delivery or something else. So what you do, you take each of the overhead separately and you divide it by some appropriate, the name we give is cost driver, meaning something that is causing that overhead to actually happen. So each of your overheads, you will think of different cost drivers, divide it, and then we will absorb it into the product. So that is ABC. It is like absorption costing. End of the day, we are dividing it by something. But in absorption costing, we add up all the overheads. Security guard salary, rent, rates, everything is added. Then you do one division. But when it comes to ABC, you take the overhead separately and divide multiple times. That's the difference. Okay. So A is saying, which of the following is not a feature of ABC? A, it recognizes that a single factor, such as machine hours, cannot be the driver of all overhead costs. That is actually correct. It's correct, right? Because in absorption costing, we think that something like labor hours can drive all the cost, and that's why we divide it by labor hours. But in ABC, we realize that that may not be the case. So that is actually true. So that can't be the answer. Then the next one is saying, it seeks to recognize the causes of the cost of activities through the use of cost drivers. That's true. Every overhead, we try to figure out what caused this overhead. After that, the cause, we call it the cost driver. The particular overhead is divided with the cost driver. It allocates the cost associated with cost drivers into cost pools. That's correct. I told you every overhead we take separately, right? For example, security salary, rent and rates, different overheads, we'll take it separately. Each of those overheads, we call them a cost pool. Okay, that's the name that we give. So yes, even C is correct. So all of the first three are features of ABC. D is saying it uses a basis such as labor hours to incorporate overheads into product costs. Not always the case. We are not going to use just one base to incorporate the overhead cost. So that is of course wrong. Okay, because what they are explaining there is the traditional absorption costing. Okay, that is not ABC. So the answer there will be B. Okay. 21st one, when I see it, okay, usually when I see this, I feel we have to do high-low method. But you can read and see if that's what they're asking. Okay. The following information relates to water consumption during April, May, June, and July. So April, the cost is this much, the liters consumed is this much. May, a separate cost, liter consumed is something else. June, July also you have the data. Using the high-low method, what is the cost of water consumed in August if 45,800 liters are used? Okay, so they are itself telling you use the high-low method. They're saying we have different liters, that is 500 to 43,200, we know how much it will cost. But suppose in August we use 45,800, can you predict how much the cost will be using the high-low method? Okay, so take 5 minutes, see if you can do it. Okay, try it out, see if you have answers. Right. So we are getting these. Let me see. Okay. So if you have the high-low method, always follow this structure. Okay. So we will have two headings: activity, cost, high, and the low. Okay. So if you look at cost, guys, cost is, or most of the time, cost only they put in the second column, right? Here they put it in the first column. There is a chance that, you might make a mistake and put cost under activity. Okay, be careful. So the cost they are giving me, it's 2,750 to 3,035. Okay. Activity, the highest was 43,200 and the associated cost is 3,035. Okay, so be careful in the numbers that you're putting. The lower activity is 37,500 and the associated cost 2,750. Okay, so we can get a difference. This will be 5,700 and here it will be 285. Okay. Then you need to get the variable cost per unit. Okay. So always remember that will be this dollar figure divided by the difference in activity. Okay. Now, most of the time, the difference in cost will be numerically a bigger figure. But in this case, that number is small. But don't get confused and, divide it the other way or anything. Always the dollar figure, which is 285, has to be divided by the difference in activity. So variable cost per unit is 0.05. Okay. Next step is to calculate the fixed cost component. So for that, we use this equation. Total cost is fixed cost plus variable cost per unit into the output level. Okay. So that's the equation that we use. So first, let's substitute the high. Usually I substitute the high. Okay. So in the high, the total cost was 3,035. Variable cost, sorry, the fixed cost is what we want to find out. Plus the variable cost per unit is 0.05 multiplied by output was in the high, it was 43,200. Okay. So rearrange this equation. You will get the fixed cost as 875. Okay. So now you have the variable cost per unit and you have the fixed cost as well. So now we can find the total cost that they are asking for. So we'll use the same equation. Okay. So we want to know what will the total cost be if your output is 45,800 liters, right? So fixed cost is 875 plus variable cost per unit is 0.05 multiplied by 45,800. So the total cost is correct 3165, which is D. Okay, simple, very simple high-low method. Okay, those of you who haven't taken it down, quickly take it down. Next is asking you, which two of the following are examples of unstructured data? Okay. Now, when it comes to data, there are three types of data, right? One is structured, another is called semi-structured, the third is called unstructured. Okay. Structured means it's very easy to find information that you're looking for. For example, it's in the form of a table. Okay. So if it's in the form of a table, you know exactly where to look for if you need a particular piece of information, right? That is structured. Semi-structured means it has some kind of order, but still it's not very easy to find the data that you're looking for. Example, maybe an email. Okay, like now in an email, say somebody sent you an email, you might be able to search, the person's name or, a particular keyword in the email. But after, you get maybe about 5-6 emails that person sent you, you will only have to go through each of them individually to find out the particular information that you need. Okay, so semi-structured means it is easy, it's relatively easy, but still there is some work that you need to do if you want to find a particular piece of information. Unstructured means it becomes very difficult for you to find some piece of information that you want. Example, a video. Okay. Now, if it is, for example, take a CCTV footage for an entire day, if you don't even know the timestamp, then imagine you have to look at the video for the whole 24 hours, then only you will get the information that you need. So unstructured means it's a little difficult for you to find the data that you want. Okay. So if you look at telephone bills, that is of course easily structured. Images, unstructured, right? There is an image, you have to find something, it's not easy. Transaction history is structured. Video is also unstructured. So the answer will be 2 and 4. Okay. Right. This is an easy one. They're asking you in a pie chart, what will an angle, a particular angle be? Okay. So it's saying a food company incurred the following costs last year for each of its 3 different markets: confectionery, beverages, nutrition. If a pie chart were used to represent the proportion of cost incurred by each area, what would be the angle of this section representing confectionery? Okay, so if you want to know the angle of a section representing something in a pie chart, you have to take the information. Now, this is the cost, no? Yeah. So you'll have to take the cost of confectionery, divide it by the total cost that they have incurred and multiply it by 360 degrees. Okay, so I don't want to waste time with this also. Let's go ahead and do it quickly, right? So that will be confectionery is 3,750,000. This figure, you should divide it by the total. So that will be 3,750,000 plus 5,300,000 plus 1,470,000. Okay, so all of this together. Let's hope that line comes. Okay. Okay, so this has to be multiplied by 360 degrees. So the answer there will be 128 degrees, which is B. When it comes to a pie chart, this is the only question they can ask. Okay, so most of the time it will just be a particular angle for a particular section that they're talking about. Correct answer. Okay, which of the following statements are correct? Okay, so they're talking about benchmarking. So what's benchmarking? When you compare your performance with somebody else. Okay, so it's saying functional benchmarking is a method of comparing one operating unit or function with another within the same industry. That's wrong. Functional means you're comparing your performance with some other company who is in some other industry. Okay, I always give the example. Let's say you're a business, you have a canteen. Say you're a bank, okay? So you are in the banking industry, finance industry, you have a canteen. You want to check how well the canteen has done. So what do? You compare the performance of your canteen with maybe a hotel or a restaurant. Now, hotel and restaurant, they are in a completely different industry, right? They are in the food industry, you're in the finance industry. But because the function is the same, canteen also prepares food, hotels and restaurants also prepare food, right? So because the function is the same, we will compare the two. Okay, so that is only the real functional benchmarking. Here, they're saying the opposite. They're saying we are comparing it with the same industry, which is false. Then the next point is saying competitive benchmarking is a type of benchmarking aimed at strategic action and organizational change. That is also wrong. Okay, because this is actually called strategic benchmarking. If you're going to aim at strategic action and organizational change, that has a special name, strategic benchmarking. Competitive means you're just comparing your performance with your direct competitor. That's about it. Okay, so both are false there. False and false, correct. ACCA, first one is not true. Okay, because it's not the same industry. It has to be a different industry. 25th one. An extract from tea company's sales budget shows the following sales values. June, it's 80,000. July, 70,000. August, it's 90,000. 50% of tea's cash are for sales. Of the credit sales, 60% are expected to pay in the month after sale and take a 2% discount. 39% are expected to pay in the second month after sale, and the remaining 1% are expected to be bad debts. What's the value of sales receipts from credit customers to be shown in the cash budget for August? Okay, very straightforward cash budget. Okay, so I'll give you a minute. See if you can figure it out. You just have to be, you should be able to properly structure your answer when it comes to a cash budget. If not, you might miss a small detail, right? So you have to be kind of organized. That way you won't miss anything. Okay. So think, okay, August. Okay, we're talking about August. Now we know any month, whatever the month may be, 50% of sales are cash. So we don't want to think about that. We want to only think about the remaining 50%. Okay. Now in the remaining 50%, they're saying 60% of the credit sale, 60% are expected to pay in the month after the sale. So that means for August, those sales that you did in July, out of the credit sales, 60% of them you will get in August, right? So July, we had 70,000. Of that, we are not concerned about the 50% which was cash. We are only concerned about the 50% which was credit. Okay. Now, in that 50%, we are going to receive 60% in the month of August. Okay. But we are not going to receive the entire 60. They are going to take a 2% discount. Okay. So we won't receive 100% of this figure. We will only receive 98% of this figure. Okay, so I'll repeat what I said. 70,000 is the sales for the month of July. Of that, 50% is only your credit sales. In that 50%, only 60% you will get in August, but you won't get the entire 60. You will get 2% less. So that's why we multiplied by 98%. Okay, so that should give you 20,508. That's July. Okay. Then they're saying 39% are expected to pay in the second month after sale. So August means we're talking about June sales now. Okay. So if you think about June, 80,000 was the sales figure. Of that 80,000, 50% only is credit sales. So we are only concerned about that 50. Out of them, 39% will pay in August. Okay. Remaining 1% is bad debt. So we can't consider them. So 80,000 into 50 into 39 will be 15,600. So ultimately, from credit sales, what we will receive in August is 20,580 plus 15,600, which is 36,180. Okay, so this is cash received from credit sales. Okay, in addition to this, you will get cash, 50% of cash that, from the 90,000, 50% will be cash sales. So in addition to that, you will get that also. But careful, here they are only asking you for the sales receipts from credit customers. They are not asking anything to do with cash customers. Okay. That will be 36,180. 26. Economy, efficiency, and effectiveness can be studied and measured in terms of inputs, outputs, and impacts. Okay. So this is how to measure the performance of a not-for-profit organization. We call this the value for money analysis, right? So they're asking you, are the following statements true or false? Okay. So the first one is saying, a school may measure inputs in terms of pupil-teacher ratio. Pupil-teacher ratio. Okay. Seems to be correct to me, but we'll just read the second also. A school may measure outputs by measuring whether trained teachers are being fully used to teach the subjects they have been trained for. What do you think? It's not very straightforward. Both are true. Okay. False and false. Okay. Now, let me explain this clearly to you, right? When you're talking about economy, guys, you're talking about inputs. When you're talking about efficiency, we are talking about the input-output ratio. When you're talking about effectiveness, we're saying, okay, is the output actually achieving the impact? Or impact means the impact that you're creating means, are we achieving our overall objective? That's what we're trying to see. Now, actually, in this question, some people might argue. Okay, it's not a very clear question, but don't definitely in your exam, you will not have a problem like this. Okay, so I'll just explain. There's one point that two people can think of it differently, right? So a school may measure input in terms of pupil-teacher ratio. Now, you might think pupil-teacher ratio means we're talking about efficiency. Okay, because the more pupils there are and the less teachers we have, we are more efficient also. That is also true. But at the same time, it can be considered economy also, because if again the teacher is one and he is teaching 2,500 students, then obviously you will pay him only by the hour, right? So you will pay him a small salary. What you collect from the student is much more, right? So in that case, in some way, it does fall under economy as well. So it does fall under this input point as well. Okay, but like I said, some people can argue and say, no, this can't be considered as economy. This is efficiency. It's true. Okay, but in this question, they are considering this to be actually economy, because the less teachers you have and the more students you have, you are going to be economical. So first one, we consider it as true. Now, the second is saying you can measure your output by monitoring whether trained teachers are being fully used to teach the subjects they have been trained for. Now, whether your teachers are being fully used or not, definitely it is efficiency. There are no two words about that, because if your teachers, you're paying them and they're just idle, that's a problem, right? So this is definitely efficiency. Efficiency has nothing to really do with the output. Okay, now what they are trying to explain here is the efficiency, and they are trying to say that this is only effectiveness, which is wrong. Okay, so second point is clearly false. So the answer there will be C. So there can be a situation where, you might feel that, another answer is correct. If this was a written paper, we can argue. If it was a written paper, you can argue saying, no, this has to be efficiency. And if your point is valid, they will give you the mark. But the problem here is where it's an MCQ. So, I mean, if they have selected C as the answer and you don't choose it, you definitely won't get the mark. Okay, so there will be one or two like this. But for the most part, your exam won't have a controversial question. Okay, so don't worry too much about it. Right. Which two of the following are properties of the normal distribution curve? Okay, so we all know the normal distribution curve. Let's draw it so then we can look at it and then decide. Okay, so usually it's a bell-shaped curve, right? This has to be straight line. In the middle, you will have the mean. Mean, we use the Greek alphabet mu. Okay, and let's read it one by one and see what they're saying. Okay, which two of the following are properties of the normal distribution curve? The area under the curve totals 100% of probabilities. Okay, so actually that is true. The entire area under this whole curve, it equals to 100% of probability. So half of the area actually totals to 50% probability. So that's correct. This is 100%. Okay, so A is correct. The mean is denoted by sigma, wrong. Mean is denoted by mu. Standard deviation is only denoted by sigma. Okay, so this is wrong. The area to the left of the mean is 1. So they're saying this area is 1. That's wrong, right? Both together are 1. This left plus right is equal to 1. So only the left will equal to 0.5, not 1. It's symmetrical, that's true. This side and this side are equal. They're symmetrical to each other. Okay, so A and D should be the answer there. Okay, correct. The following data relates to inventory item SKO24. Okay, so we have the usage, the lead time, and the EOQ. They're asking for the reorder level. Okay, so if you don't know the equation for reorder level, then you won't be able to do it. Okay. So reorder level, that falls under chapter 3, where we talk about materials. We give you the equation to calculate reorder level, which is, I'll give it to you right now, maximum usage into maximum lead time. $14,000, correct. Okay, so we have the usage, right? We're saying it's between 600 and 1,400. There, we know in our equation, we have to use the maximum usage. So we can't use 600, you have to use 1,400. Lead time, it can be minimum 5 days, maximum 10 days. You have to take the maximum figure, which is 10. So like someone mentioned, it is 14,000. Reorder level is 14,000 units. Okay. 29, are the following statements true or false? Okay. The objective of budgetary planning and control system is to maximize profit. What do you think? Is that true? Okay. Listen to me carefully, right? We budget to plan. Okay, we budget because we want to have a plan for the future. Now, why do we need to have a plan? Because if you don't have a plan, you won't achieve your overall objectives. Okay, so you will have a mission. Under that mission, there will be CSFs, there will be KPIs. Under the KPIs, you will have objectives. Okay, in order to achieve those KPIs. So if you don't have a plan, you are not going to achieve your objective. So why do we have a budget? So that we can achieve our objective. Now, if our objective was to maximize profit, which most companies have as an objective, then yeah, this point is true. But you can't say that generally, because there are some organizations that are not for profit, meaning they don't care about the profit. It can be a state hospital, a state school, a charity. Okay, so they are not for profit organizations. They don't care about profit. Profit is not an objective. So in that case, they will be budgeting for some other reason. Okay, so budgeting usually happens so that we can achieve our objectives, and most of the time, one of the objectives will be profit maximization, but we can't say that's the case all the time. There can be organizations with other objectives also. Okay, so the first point is false because they're generalizing it. Second point is saying identifying objectives is the first stage in planning and control cycle, in the planning and control cycle. That's true. Before you do any budgeting, first of all, you have to identify what was my mission, and to achieve that mission only, I will break it into, bite-sized objectives. So first thing is you have to identify what the objective is, then only you can do any plan. Okay, so second point is true. So this 29th will be false and true. 30th, an accountant is selecting a sample of invoices for checking. The invoices are numbered sequentially. The first invoice is selected randomly and is invoice number 3. They then select every fourth invoice to complete the sample. What is this type of sample called? Systematic, okay. Any other ideas? Right. So what are they saying? You have invoices. Okay. Each of them has a number. So 1, 2, 3, 4. I'm just putting it, right? 6. Okay. So what is happening? The first invoice that you select for sampling is number 3, and this is done randomly. Okay. After that, every fourth invoice, they are going to check. So 7, and then after that, there'll be a gap of 4 and the next number. So every fourth invoice, they are going to check. So this will be, the gap will be 4. Everywhere it will be 4. Okay. So this is a classic example of systematic sampling. Right? Nothing else, systematic. The first is where we start, we decide using random sampling. After that, the gap, we will itself decide on it. It's a predetermined figure. The gap between the samples, we will decide and choose the number accordingly. Okay, so this is systematic sampling, which is D. 31. In a period, there was a favorable labor efficiency variance of 27,000. The standard wages rate per hour was 6 and 30 hours were allowed for each unit as a standard. Given that the actual labor hours worked were 43,500, how many units were actually produced? It is to do with variances, right? But they are not asking for a particular variance. Actually, the answer is given. The labor efficiency variance, they're telling you what it is also. So what are they actually asking you? They are asking you one of the input data. Usually what they give in the question, this time they're asking you to work backwards. So as I always say, when you see a variance question, first figure out what the equation should be and write it down. That will only help you decide the next step. Okay, so here it's labor efficiency. So we have the labor rate, labor efficiency variance. So this is the second part of the equation. First write that down. After that, you can decide what to do with it. Okay, so I'll give you a minute. See if you can figure out what they're asking. Thousand 200. Yes, Maisha, I'll give you a minute. Okay. After you're done with this question, I was thinking once we're done with we can't. Once you're done with this question, take 5 minutes. The reason I don't want to give you a full break is we might be able to finish off earlier than 9. Okay, so let's do 31. Take a break quickly and come back. Okay. Right. So let's see what we have to do here, right? So we have our actuals. Usually this is how it looks like, right? You have the actual at standard and the standard. Okay. Now why we don't have to worry about actual and actual at standard, because the difference between these two is the rate variance. We don't have any information about rate variance, right? What we know is the efficiency variance. Okay, so let's worry about these two boxes. Okay, so here it will be actual hours into standard rate. Here it will be standard hours for actual production into standard rate. Okay, so they're telling me the efficiency variance. They're saying there was a favorable labor efficiency variance of 27,000. Very clearly given to you. Okay. And now let's just fill in the information. Okay. They're saying the standard wages rate per hour. The standard rate was 6. Okay. So we don't know the actual hours, but standard rate was 6, it seems. So let's just fill that in. Okay. 30 hours were allowed for each unit as a standard. So standard hours will be 30. Actual production do we have? Let's see. Given that the actual labor hours were 43,500, how many units were actually produced? So they want this actual production figure only. They are giving me the actual hours worked also, which is what I need here, 43,500. Okay, so I can take a total here, 43,500 into 6, which is 261,000. And here it's basically 30 into AP, like actual production. If you want, you can consider that X. Okay. So 30 into something into 6 should give me a particular answer. That is not given, right? But I know that the efficiency variance is favorable. Okay. That means the amount that I have spent, the actual amount that I have spent, because this is the actual box, this is the budgeted box. Actual amount that I spent is actually less than the budget. And how much lesser than the budget is it? It is 27,000 less. Okay. So the answer over here, it should be 261,000 plus 27,000, which is 288,000. Can you see? Because now look at it. The budget is telling me spend 288,000. Actually, I spent 261. Spending less is good. That's why it is a favorable variance. Okay, so because it is favorable, I added the 27,000 to 261,000. Okay, so now I have a clear equation over here. 30 into the actual production into 6 should equal to 288,000, a simple equation. Okay, so all you have to do is get the actual production, which will be 288,000 divided by 30 into 6, which is 1,600. Okay, so actual production is 1,600 units. Simple. Right? So, like I said, when I read it, even I didn't know what they're asking. When I saw the equation, that's when I figured out, okay, this is what they're asking me. Right? Okay. So, yes, those of you who got 1,600, it's correct, right? Okay, guys. So, let's take a quick 5-minute break. Okay, come back at 7:15 and 7:10. No, yeah, come back at 7:15. And we will quickly finish off the rest. Okay, so don't delay. I'm sure we can finish this off way before 9 today. Okay. Okay, hope you guys are back. Okay. Right. So we just finished the 31st question. Let's look at the 32nd one. Okay. Which of the following data sources would social media be classed as? Okay. So sensor means something like a barcode machine or, like a GPS tracker, something. There's a machine involved with collecting that particular data. Okay. So definitely social media is not sensor. Machine, it's not machine data also. Okay. Transactional means it's to do with, your sales and your purchases. So any invoice that you have, not that human. It is human data. Okay. 33. The following information relates to job number 3579, which is being carried out by MH company to meet a customer's order. Materials issued to job 3579 worth 5,000. Materials transferred to job 3579 is 400. Overtime premium is $1 per hour. Production overhead is $5 per direct labor hour. Grade X labor, that's direct labor, 200 hours at 3 per hour basic rate. 100 of these were worked in overtime at the request of the customer in order to complete the job as early as possible. So remember, whenever you do something at the request of the customer, then that falls under a direct cost. Okay. A supervisor recorded on their job sheet that 20 hours of their time was spent on this job. They are paid 5 per hour, and the cost of their time is treated as a direct labor cost in the company's cost account. So in this particular company, even the supervisor's cost is considered direct. Usually we don't consider it direct. Okay, but here they are considering it direct. They're telling us that, so we can include it. What is the full production cost of job 3,579? So this is actually easy. Job number 3579. Okay. So let's look at it one by one, right? So they're saying materials issued, right? So issued is 5,000. Then materials, sorry, transferred is 400. Okay, then we have to look at the overtime part, right? So let's look at the labor. So they're saying we are having direct labor, that is 200 hours, 3 hours is the basic rate. Okay, so direct labor, the basic portion is 200 at $3 per hour. Okay, so that will be $600. But in addition to that, the overtime premium also you have to include. Reason is it is done at the specific request of the customer, right? So if you look at the overtime premium, they're saying 100 hours were overtime and every hour you pay them $1 as part of the premium, right? So 100 hours, every hour you're going to pay $1. So this will be 100. Then the supervisor's cost. Okay, the overhead you don't have to consider, right? Because they're asking for the full production cost now. Okay, so we don't have to consider the overheads. So if you look at the supervisor's cost, give me a minute. Sorry, this is the production overhead, right? I'm sorry, I thought I read it as a non-production. If it is a production overhead, then yes, we will have to include it, right? Because it will be part of the production cost. So let's go ahead and include that, the production overhead, which they're telling us is $5 per direct labor hour, right? So be careful here. Okay. Now, we know that grade X labor was 200 hours and we will be tempted to just put 5 into 200. But careful, even the amount of hours that the supervisor is working is considered direct labor, right? So we can't forget about the 20 hours, right? So the overhead, production overhead will be 5 into 220 hours. That's the common error there. Okay, so 5 into 220, 1,100. Then finally, we'll look at the supervisor's salary, which we have to consider because they're telling us to consider it direct labor. They're saying it's 5 per direct labor hour and they are working for 20 hours. He has in his timesheet 20 hours. So supervisor's cost is also going to be 100. Okay. So I think we have considered everything that they mentioned. Job costing is that, right? All the costs that you have, just add it up together, right? So full production cost, just add all of this together. Which is 7,300. Okay, so the answer will be D. Okay, that's a simple job costing. So when you see job costing, ideally you should be happy. Okay, because you don't have to think too much. Actually, this is a little, it's a different type of question, right? If this was a normal question, then this overtime premium we won't consider. 100 into $1 we won't consider, and the supervisor's 20 hours also we won't consider, because that will all fall under indirect labor. But in this case, they're telling you to put everything in, so we're just putting it in. Which of the following is considered to be an inventory holding cost? So when you see that, think of it like the cost that you have because you're keeping inventory in the warehouse. Okay. Okay. Right. So let's look at it one by one. Disruption of production schedules. If the production schedule is getting disrupted, that has nothing to do with the amount you will have to incur to keep the goods. Okay, so that doesn't seem to make sense. Second one, loss of customer goodwill. We can't consider that also a holding cost, right? Holding is something to do with the storage. Okay, so that is also not there. Shipping and handling, we know that is ordering cost. We don't put that under holding cost. Inventory obsolescence. That means because you kept inventory in your warehouse for a long time, what has happened? It has become obsolete, meaning you can't use it anymore. You have to get rid of it. You have to write it off. So that means that written off figure, let's say the value of that inventory was $2,000, that written off $2,000 will be considered holding cost. Okay, so holding cost examples are any insurance you're paying, any warehouse rent, and maybe any if there is any obsolete inventory, then the written off number, because when you write it off, it's an expense in your account. So that expense is actually considered a inventory holding expense. Okay, so the answer there will be D. 35. When I look at it, I can say for sure it is high-low method. But this is a very different type of high-low method. How do you think you will do this question? Read it once, and then I will explain. Okay. So it's saying the costs of the factory maintenance department for Freer company appear to have a variable element dependent upon the number of units produced. The fixed element of the cost. Now, when I read that itself, I know it's a semi-variable cost because they're saying there's a variable element and a fixed element. Okay. So then they're saying the fixed element of the cost steps up by 30,000 when 32,000 or more units are produced. Get that clear, right? Now, if you produce less than 32,000 units, then the fixed cost is not going to step up. So maybe this 30,000, maybe less than 32,000 units you can do in one factory. Okay, but the moment you have to prepare more than 32,000 production, you might have to rent another factory. So the additional rent of the second factory, that could only be this $30,000. I'm just giving you a hypothetical scenario. Okay, so the point you have to understand is from 0 units to 32,000 units, there won't be a step up. We don't know what that fixed cost is. Okay, we don't know. Whatever it is, that will be X. Okay, but the moment you pass 32,000 units, then the fixed cost will be that X plus 30,000. That is the step up. Okay, the variable cost per unit is constant. Okay, then they are giving you the volume of production. 28,000, cost is 160,000. 34,000, the cost is 208,000. What would be the total cost for 29,000 units and 35,000 units? Now, when we were doing stepped fixed cost in our slides, I used to say, if there is a step up, then choose two figures, two production units, X figures, activity levels that are either after the step up or before the step up. That's what I said. Okay. Now, for example, we know that at 32,000 units, the step up is happening means, if everything was right, I will say before 32,000, if there are two figures, use that. If not, after 32,000, if there are two figures, use that. But here we have a problem. What's the problem? We have one number, 28,000, which is without step up, and 34,000, which is with step up. Okay, so the way we do the high-low method, it will change slightly. Okay, so watch carefully. It's nothing complicated. The first time you see it, it will make sense. After that, it won't be like rocket science to you. But until you see it, you will feel like it's a tough question. Okay, so watch what I'm going to do now. So we have activity, we have cost, we have the high and the low, as always. Okay. So at the highest activity we have is 34,000. The cost is 208,000. The lowest is 28,000 and the cost is 160,000. Okay. Now the next step, usually what we will do is we will take the difference. But here we can't. Why can't we do it? Because 208 is with step up. And 160,000 is without step up. We have a big problem, right? Actually, it's not a big problem, right? So what you can do is you have to bring both of them on the same page. That means this is without step up, 160,000. This is with step up. What you can do, simply remove that step up element from this 208,000. Simple as that. Okay. So 208,000 minus 30,000. Because then both will be on the same page. Both will be without step up. Okay. So that's what I'm going to do. I'll copy this again. Okay, but this time I won't put the cost as 208,000 directly. It will be 208,000 minus 30,000. So that will be 178,000. Okay, so this now both the figures are without step up. So now from this point, you can just continue the normal high-low method, right? So here the difference will be 6,000 and here the difference will be 18,000. Calculate the variable cost per unit. That will always be the dollar figure, which is 18,000 divided by the difference in activity, which is 6,000. So this will be $3. That's the variable cost. Now we need to find the fixed cost. For that, we have the equation total cost equals fixed cost plus variable cost per unit into output. Okay, so now you can substitute either the high or the low. Let me substitute the low here because when I do that only, it will include it without step up. It will be easier for me to get 29,000. If you want, you can substitute high also, doesn't matter. Okay, so let me substitute the low here. So activity is that cost is 160,000. Fixed cost is what I want to find out. Variable cost is 3 and the output at the low was 28,000. Okay, then rearrange this equation. You can find the fixed cost. It will be 76,000 very clearly without step up because we took the low, right? 76,000 without step up. Okay, then what will the fixed cost be after step up? Okay, that will be 76,000 plus 30,000, which is 106,000. Okay, so suppose you want to find the total cost for a number of units less than 32,000, you will use 76,000 as the fixed cost. If it is more than 32,000, you will use 106,000 as the fixed cost. Okay, so they're asking me the total cost at 29,000 units, right? So total cost at 29,000 units. So fixed cost, obviously at 29, since it's less than 32, it will just be 76,000 plus, I'm using the same equation, right? Okay, so 76,000 plus the variable cost per unit is 3 and the output level we want is 29,000. Okay, so total cost at 29,000 will be 163,000. Same thing, they want at 35,000 units as well. So when it's 35,000 units, we have actually stepped up, right? So at this point, you have to use 106,000 as the fixed cost plus 3 into the output level, which we want for now is 35,000. So 106,000 plus 35,000 into 3 will be 211,000. Understood? So the answer will be B. That's what I said. The first time you see it, you will, feel like it's difficult. But once you figure it out, you'll just realize that it's actually a very simple point. Okay. Most of you might not have this answer, so I'll give you some time to take it down. And then we can move on to the MTQs. Okay, thank you, Dinanshi. Okay, I hope the others are also done. Okay, right. So let's move on to the MTQs. Okay, so a few things I have to say about the MTQ, right? First is there are two sure shot questions. That means two questions that will definitely be from these two chapters. One is the chapter performance measurement, meaning something to do with ratios will definitely be there. The next is something to do with variances will definitely be there. Okay. The third question, it can be from either budgeting, it can be from investment appraisal, or it can be from forecasting. Okay. It won't be from materials, labor, overheads. It won't be from there. Okay. That the examiner has made clear. Okay. So sometimes people think MTQs are hard, but actually speaking, the MTQs are the easy areas to gain your marks because unlike MCQs, the marking is broken down here. Now, meaning, for example, this task 1, it's worth 6 marks, right? That doesn't mean all 6 answers have to be there. Even if you have 4 out of 6, you will get the 4 marks. Unlike an MCQ, right? In an MCQ, if they ask you to select 2 answers, 1 is correct, 1 is wrong, you don't get 1 mark now. Both have to be correct, right? But over here, it's not like that. The marking is broken down. Okay, so in your exam, you will notice in the side, it will say, right, 1 mark or 0.5, meaning the breakdown of the 6 marks will be given to you. Okay, that's the first thing. The next thing is, you have to realize that you can't be, like when it comes to the ratios especially, they won't ask you everything that you know. Okay, there will be 3/4, if not, I will even go ahead and say 85% of the paper is something that you know, right? But we have to differentiate an extraordinary, exceptional student with a good student. No, there has to be some differentiating factor. That is that extra 15%, meaning there will be about 10 to 15% of your paper where they'll be talking about stuff that we haven't done in the past. But you have the knowledge to answer that and get it right. So if you have your basics right, you should be able to get the answers easily. Okay. Now, most of the time, in which area do they test this general, competence, whether you really can do a tough question? Most of the time, it happens in this ratios area. Because ratios, there are certain fixed ratios we all know, ROCE, return on sales, operating profit margin, asset turnover. Those are ratios we learn, so we don't have to worry about them. But there are other ratios where, especially if you're in a working situation where you're working in the corporate, then certain ratios you have to be able to think of a way to calculate it. Okay, so most of the time, the ratio area, they will tend to test something that you may not have seen before. Okay, so don't be afraid when you see it. It's normal. Just rationally think how you can go about that situation. Whatever you feel is right, don't be scared to do it. Just go ahead, do it, finish it off. Okay. Right, so let's go through this. It's saying, Weasley Company makes computers and supplies a help desk service to its customers. Customers pay an initial fee for the computer and a monthly fee for the support help desk. Operating data for the year 31st December 2012 are as follows. We have sales attributable to new products, average capital employed, profit before interest and tax, average number of customers, average number of computers repaired, returned for repair each day, number of customers lost, and average number of computers unrepaired at the end of the day. So we have a lot of information there. Task 1, calculate the following ratios and other statistics for Weasley Company for the year ended 31st December 2012. Okay, so we don't have to worry too much about the first 3, ROCE, return on sales, and asset turnover. Okay, so we're talking about Weasley. Right. So ROCE, we all know how to calculate it. It is your profit before interest and tax divided by the capital employed into 100. Okay, so over here, profit before interest and tax, they're telling me over here is 45 million. Okay, we can also just do it in millions itself. And the capital employed, they're telling me is 225 million. Okay, so if I multiply that, if I divide 45 by 225 and multiply by 100, I should get the ROCE. which is 20%. Okay. Then we have the return on sales. Return on sales is like an operating profit margin. Okay, so you should know that. So not like it is, okay, it is the operating profit margin. So operating profit PBIT divided by sales into 100. Okay, PBIT, I know it is 45 million. Sales, they're telling me it is 375 million. Okay, so that will give me an operating profit margin return on sales as 12%. Then we have asset turnover. The asset turnover, the usual formula we use is sales divided by capital employed. We give it as a decimal, right? So sales, I know it is 375 million divided by capital employed, which is 225 million. So asset turnover is 1.7. Okay, that's an easy 3 questions there. Then they're saying average weight for computer repair. Okay, average weight for computer repair. How long should you wait on average to get your computer repaired? Okay, so let's look at the information. There are 4 things that they're telling me. They're talking about the average number of customers, average number of computers returned for repair, number of customers lost, and average number of computers unrepaired at the end of the day. Okay, now I'm telling you very clearly from this, you can see the average number of customers and number of customers lost has nothing to do with the repair statistics, right? So clearly you have to use these 2 figures, that is average number of computers returned and the average number of computers unrepaired at the end of the day. Okay, so those are the 2 numbers that you have to use. So if you want to know the average weight, we know which 2 numbers we have to use. That will be the number that is unrepaired at the end of the day, which is 300, divided by the total number that you get for repair, which is 9,000. Okay, that you multiplied, we want it in days now, so you have to multiply it by 365 days. So that should give you 12.2. Okay, that's the average weight. Percentage of customers lost. Okay, that's actually easy. We know that I am losing 95,000 customers. Okay, I'm losing 95,000 customers. In total, I have 1.9 million customers. So just put that. Percentage, no? So into 100. So percentage of customers lost will be 5%. 5% of customers are lost. Finally, percentage of sales attributable to new products. Right? So if you look at the sales to new products, it's 7.5 million. You divide that by your total sales, which is 375 million. They want a percentage multiplied by 100. So basically 2% of your total sales is attributable to new products. Okay, so that will be 2%. Right. That's it. If you do this, you get a 6 easy marks there. Okay. Task 2 and 3. Now, most of the time, MTQs will look like this, right? There will be a calculation and then next 2 will be, just to sit back, relax and, choose the answer, right? Which 2 of the following statements about the use of non-financial indicators are true? Okay. They are less likely to be manipulated than financial ones. That is true. Okay, because financial numbers, you can manipulate it easily, especially if you're an accountant, you will know exactly how to manipulate it. But non-financial figures like your quality, customer satisfaction, those things are difficult to manipulate. So 1 is actually true. They provide short-term incentives for managers, they don't. Okay, actually financial only provides short-term incentives. This, it doesn't, right? So that is wrong. They are leading indicators of financial performance. That is true. Okay, the reason is, if your non-financial indicator, let's say for example, you have a non-financial indicator indicating about your quality. Okay, now let's say if this indicator is saying quality has dropped. Okay, in that particular period, quality has dropped. Now, immediately your financials, maybe your profits and your sales, it may not drop at the same time. Okay, because what has happened, quality has dropped, but your customers still haven't realized it. Okay, but with time, if you continue to maintain this poor quality, definitely your financials are also going to drop. So getting this non-financial indicator of quality and identifying that it is actually dropping is a leading indicator. It gives you a heads up saying that in the future, a financial indicator will also drop. Because with quality drop, definitely profits also are going to drop because sales will drop. Okay, so these are leading indicators. In advance itself, it's telling you something is going to happen negatively in the future. Okay, so that is actually true. So the answers there will be 1 and 3. I'll just read the fourth one. They're easier for managers to understand. That's wrong. Financial ratios, everybody can understand. But these ratios are a little difficult to calculate also, difficult to explain also. Okay. The last one is saying Weasley Company is considering the use of value analysis. The first point, which of the following statements is true? Okay, the first point is saying value analysis involves a systematic investigation at every source of cost. Actually, that's true. Okay, because now say, for example, you're making a product, you realize that it's too costly. It's costing you too much. So it's eating your profit margin. Okay. So what do you try to do? You do a value analysis, meaning you look at every aspect of that product. You know, now, for example, if you're making, let's say, a phone, you look at the body. Am I making it out of metal? Am I making it out of plastic? Is it glass? You look at the software, everything, you look at it in detail and see if there is a particular feature that is not valuable to your customer. You see if you can reduce that, if you can scrap that feature off. Because by doing that, you will save on your cost, but at the same time, your customer is not going to get affected by that. So value analysis means we look at every source of cost and see if we can cut down. Okay. Second, so the first one is correct. Second one is saying value analysis considers 3 aspects of value. Actually, that's wrong. It's 4, right? So you have a cost value, an exchange value, a utility value, and an esteem value. Okay, so look back at your notes. You would have written this down. There are 4 aspects of value that we have to consider when we are doing value analysis: the cost, the exchange, the use or the utility, and the esteem value. Okay, so consider all 4 of these aspects and then only decide whether you're going to cut down on that cost or not. Okay, so second one is wrong because they're saying 3. So 1 is true and 2 is false. The answer is A. So now see, one question is ratio analysis. I told you the second can be anything. I mean, doesn't have to be in this order. One will be ratio analysis. The next one can be either forecasting, it can be budgeting, or it can be investment appraisal. Here they seem to be asking about a little bit of forecasting. Okay. Right. So it's saying here, Clean Company has produced a scatter diagram showing the weekly total cost of production, that is the dollars, plotted against weekly outputs, which is units. So always remember, dollar means it's a cost. No, mostly we are talking about the y-axis, and output is independent. Cost is dependent on output. Output is independent, so that will be on the x-axis. A broadly linear pattern is evident with R equals 0.9. R is the correlation coefficient. If you remember, it can be any figure between -1 to +1. The closer it is to -1 or the closer it is to +1, the stronger the relationship between the 2 variables. So when you see 0.9, you have to identify that both are strongly correlated. Okay. The regression equation is this: cost equals 1500 plus 15 times the units of output. 50 data points have been included in the analysis with output ranging from 100 units to 1000 units. So to get this regression equation, we have used 50 points. Pretty reliable. Okay. Starting from 100, ending at 1000. Output next week is planned to be 500 units. Okay. Task 1, weekly fixed costs are approximately what? Okay. So we have the equation, regression equation, that is the cost equals to 1500 plus 15 into the output. Now remember, this is mimicking the y equals a plus bx, the equation of a straight line, right? So y equals a plus bx, right? So over here, we know that a is only the fixed cost, b is the variable cost per unit, y is the dependent variable, and x is the independent variable. All that we know. Right? So here they're asking you, what is your weekly fixed cost, right? So we know whatever is aligning with A, that is 1500 is only the weekly fixed cost. Variable cost per unit, what is it? Variable cost per unit, we know whatever is aligning with B, so that is 15. Then they're asking you, what is next week's production cost going to be, right? So we know that is 1500 plus 15 into whatever output you're going to make next week. Next week output is planned to be 500. Okay, so total cost for next week's production will be 9,000. An easy 4 marks. Task 2, are the following statements true or false? First is saying there is very little correlation between weekly cost of production and the production level. Okay, so they're saying the Y and the X production level is actually output. They're saying there is very little correlation. That's wrong. No? R is 0.9 means that is a strong correlation. That's definitely wrong. 90% of the variation in weekly cost can be explained by the amount produced. Now, what they're talking about is something called the coefficient of determination. That is actually R squared, so 0.9 squared. Okay, so when you get that 0.9 squared, that will tell you what proportion of Y is influenced by a change in X. So if you take 0.9 squared, guys, that doesn't give you 90%, that gives you 81%. So if they had said 81% of the variation in weekly cost can be explained by the amount produced, it is very correct. But here, the value that they're giving is wrong. R squared is 0.9 into 0.9, which is 81%. Here, they're just taking 0.9 and making that a percentage, calling it 90. So that's wrong. Okay, so that is also false. False. Given the information, any forecast using the regression equation is likely to be very unreliable. Can't say that. You know why? Because one correlation coefficient is 0.9, strongly positive correlation. Next, we are using 50 points of data, 100 to 1000. Using 50 points is quite a lot of units, quite a lot of data points. Okay, so we can consider it to be reliable, especially if you're going to make an estimate between this 100 to 1000, because at that point we are interpolating. When you interpolate, it is actually reliable. Maybe if you go beyond the 1000 or less than 100, we are extrapolating, then it may not be reliable. But here, since R is also 0.9, we can't say it's not reliable. Okay, so this is also false. So 3 falses. Task 3. Clean company sets its fixed budget at 100% capacity. The budgeted sales are 600,000 and the budgeted net profit is 50,000. Budgeted costs are 20% fixed and 80% variable. They're asking you, what is the flexed budget for net profit at 70% capacity? So they're saying if you run at 100% capacity, you're making a net profit of 50,000. If you do only 70% capacity, what will your net profit be? Simply. Okay. So if you want net profit, obviously you should take your sales and you should deduct your cost. That will only give you profit. No? Okay. So if you look at your sales at 100%, you're going to make 600,000 means at 70%, you will only make 70% of that. Okay. So 600,000 into 70% in your flexed budget, you will make 420,000. Okay. Now we have to figure out what is the variable cost and what is the fixed cost, right? Now we know that if the sales are 600,000, net profit is 50,000. That means 600,000 minus 50,000 is only obviously your cost, but that is your total cost. Okay. So I'll just calculate total cost here. That's going to be 600,000 minus 50,000, which is obviously 550,000. Okay, that's the total cost. But we have to be a little careful here. That total cost is divided into variable and fixed. So if you look at the variable element, they're saying of this 550,000, they're saying budgeted costs are 20% fixed and 80% variable. So 80% of this is only variable. Okay, but the entire 80% you can't consider it as the variable cost because we are flexing it to 70%. So 550 into 80 is at 100% capacity. We have to change it to 70% capacity. So again, we have to multiply it by 70%. So 550 into 80% into 70%, that will be 308,000. That's a variable cost. Then take the fixed cost. So we know of this 550,000, if 80% is variable, 20% is fixed. So 20%. Okay. But be careful. You don't have to flex a fixed cost because if it is going to cost you 550,000 into 20 at 100% capacity, even at 70% capacity, it will cost you the same because it is a fixed cost. Okay. So we don't have to flex it further. 550 into 20% will give you 110,000. Okay. So 420 minus 308 minus 110, your net profit flexed to 70% capacity will be $2,000. Okay, so you just have to type in 2,000 here. Don't put commas or anything. Just have to put the number only. Okay. 3 marks. Nothing much. It's simple. The only thing is, again, in this case, unfortunately, the answer has to be there because they haven't given you any space for workings as such. So if the 2,000 is there, you get 3 marks. If it's not there, even if maybe 2 of your calculations are correct, only this is wrong, still the computer is not going to know that. It's just going to mark it wrong. Right. So the 38th question, guys, is a comprehensive variance question. Okay. If you can do this 38th question, you can tackle any variance question. Okay. I'm telling you that's the reason why I included this in the last mock, because I know now in the MTQ, any other variance that you get will definitely be less complicated than this. Okay. Yes, Asya, you have to ignore any commas. Have to ignore. Okay, even at the beginning, in the slide, when they explain how you should go about the system, they mentioned that. Don't put commas for answers. And if there is a decimal point, you can put a full stop as a decimal and write the answer. But you don't have to put commas, no units of measurement. Okay, usually, this is a dollar. Can you see? The dollar sign is already there. No? Likewise, in your exam also, that dollar sign will already be there. See, all of these, you have the dollar sign. Here, can you see, you have the days already written. Percentage is already written. Okay, so you will never have to put any other sign for your exam. Only the numbers. Okay, no, not even a percentage sign. Okay. Right, so let's look at the 38th question. PJR company operates a standard costing system for its single product and all inventories are maintained at standard cost. During a period, the following details were recorded. There was no opening and closing work in progress. The standard cost for the product was this. Remember, standard cost means they're talking about budgeted data. Materials, labor, fixed production overheads is given. Then they're saying the standard unit rate for overheads is based on budgeted production of 2,600 units for the period. Okay, so budgeted production is 2,600. Then they're talking about actual. Okay, purchase of materials on credit, wages that they have paid, fixed production overheads that they paid, and material issues to production, everything is given to you. 2,700 units were completed during the period. Okay. Then they're saying sales variances are as follows. So they've calculated sales variances for you. Sales price variance, sales volume profit variance is given. Sales volume profit variance is given means we are doing absorption costing. If not, it would have been sales volume contribution variance. Okay. Fill in the appropriate boxes in the operating statement to calculate the standard profit from actual sales and the actual profit. Select A to denote adverse and F to denote favorable. So here in your exam, there will be like a drop-down menu. Okay, so you click on that arrow and if it is adverse, click adverse. If not favorable, I mentioned this in classes also. Whenever drop-down menus are there, don't use the scrolling wheel on the mouse. Okay, because it will change the answer from drop-down menus. Okay, as a rule itself, I'm telling you, don't use the scrolling wheel when you want to scroll up and down in your exam. Use the scroll bar on the side. Okay, because sometimes without you knowing, when there is a drop-down menu or, if there is a, like this kind of a menu where you have true, false, by chance, if that menu, that particular cell was selected and you change the wheel, it will change your answer. You might not realize that. Okay, so that's what I'm telling you. Avoid the wheel because unnecessary, right? Unnecessary tension. Right. So they're giving me a statement. They're telling me fill this statement. So I have to calculate all the variances that I have to put in and fill in this particular statement. Okay. So let me write it first. In your exam, you don't have to do it, obviously. It will be given to you. So budgeted profit. I know that that is 210,000. Then they're asking me to put the sales volume profit variance. Sales volume profit variance is actually given to me in the question over here. 27,500 adverse. So all I have to do is put that here. 27,500 adverse. Then they're asking me to take the standard profit from actual sales. So that is a total, right? You should know that. It's 210,000 minus 27,500, which will be 182,500. That's it. Okay. Let me just move this one cell to the right. So that is that. Then they're telling me to get the variances. What do we have? First variance is they're asking for the sales price variance. Sales price also, it's given directly in the question. 4,167 adverse. Yeah, I'll write it here itself. Adverse. Then they're asking for okay. They're asking for the material price. Okay, material price, direct material price variance. So let's do a working here. Price means we know this is what we should have. Actual at standard. Okay, only these two are required because the difference between these two boxes only will give you the price variance, right? So here what will we have? Actual quantity into actual price. And here it will be actual quantity into standard price. Simple. Okay. So let's go to the question and let's look at the actual data. Purchase of materials on credit. Actual quantity that we have purchased is 19,748. Per kilo, we don't know how much it was, but we know that the total that we paid is 118,488. So you can put the total. Then here also again 19,748 and the standard price per kilo I should have paid is $5 per kilo. Okay. So I will put that here. So 19,748 into 5 is 98,740. So now if I want the price variance, I will have to take a difference. This minus this. So price variance is 19,748. Okay. It's a coincidence that it is equal to the same 19,748 kilos, but that won't always be the case. Okay. Right. So now we have to decide whether this is adverse or favorable. Okay. So this second box has a little bit of standard. So that's the budget. First box is entirely actual. So according to budget, I should spend 98,740. Actually, I have spent more. 118,000. Spending more is bad. So this is adverse. Okay. So copy this and you can put it over here. 19,748. Okay. Then they're asking for material usage. So let's put that. They didn't ask us to calculate it. It's already given. It is 1925. But we have to decide whether this is adverse or favorable. Okay, so I'll show you how to decide that. So you can see here the material issued, right? The material that we have issued to production is 106,075. It's worth 106,075. Okay, that is for 2,700 units. Okay, but if you really look here, I am supposed to, per unit, I am supposed to issue 8 kilos at $5 per kilo. Okay, so let me see for 2,700, how much am I supposed to spend, right? So for 2,700, I can take 8 kilos per unit and every kilo I have to spend $5. Okay, so according to my budget, to 5. According to my budget, I can actually spend 108,000, no problem. Okay, but see, what have I issued? I have only issued 106,075, meaning I told them in my budget, I told them issue up to 108,000, no problem. But they have actually issued less. If they issue less, that means they have used less. If they use less, that's good for me. That's why this is favorable. Okay, so this will be a favorable variance. If you're finding it difficult to figure it out, then by all means, go ahead and include this as well, standard. Okay, so here this will be the actual quantity at actual price, actual quantity standard quantity for actual production into standard price. Okay, so we know that the standard quantity is supposed to be 8 kilos. Actual production was 2,700. Standard price was 5. Okay, so here it will be 8 into 2,700 into 5. 108,000. This is only the usage variance. Usually what do? We take the difference between the two. Okay, it's not matching here, but that's because they have already given you the answer, but you don't have to worry about that. Okay, what you have to worry about is this 108 being the budget. They gave us 108. Actually, we used less. Okay, so that is why this is a favorable variance. The reason why there is a difference between our usage and their usage is because what we purchased and what we issued are two different things. Okay, that is why. So actually, this is a situation where you have closing stock. Okay, that's the reason why they haven't complicated it for you. They have given you the variance. Because like I said, very rare for them to ask you to do variances with closing stock or idle time. Okay, so in this case, they have done it for you. You just have to figure out whether it is adverse or favorable. So that is the material usage. Then we have the labor rate. Again, it's given to us. How much is it? 2,820. Labor rate 2,820. Is it adverse or favorable? Okay. So according to my budget, look here. I am supposed to spend 5 hours per unit, right? So 2,700 into 5. I'll take these numbers, 2,700 into 5. And that is the total number of hours. Each hour, I will pay $7. Okay. So according to the budget, I can pay my laborers 94,500. Okay. But see, actually, I have ended up paying them 101,520. I have paid them more. Paying more is bad. So this will be adverse. We didn't use the material issue rate, meaning the actual price you're talking about. This is actual production, right? Standard quantity for actual production, not actual price. Okay. I know here also we put AP, but this is actual price. This is actual production. Okay. So that's the difference in the equation. Careful. Right. So according to the budget, I can spend 94,500. I have gone and spent 101,520. Bad. So this will be adverse. Okay. So these two, you just have to know to do the figuring out whether it is adverse or favorable. I'll keep it on for a bit, but I will need the space when I'm taking totals. Okay. Right. So labor rate is done. Now I need to get labor efficiency. Okay. So for that, I can't help it. I have to do the full calculation because I don't have the figures, right? Direct labor efficiency. Okay. So I will just copy these two. Okay. So this is going to be actual hours into standard rate. And here it will be standard hours for actual production into standard rate. Okay. So if you look at labor, the actual hours that we have worked is 14,100 hours. Standard rate is $7 per hour. So that is 7. Standard hours for actual production. I'm going to allow you 5 hours for 1 unit. Actual production was 2,700 units. Standard rate is 7. So this is easy. You can take your totals 98,700 and 94,500. Okay, this is only the efficiency. Take the difference between the two, 98,700 minus 94,500, 4,200. Okay. Now, the right-hand side is entirely budget. This has a little bit of actual. According to budget, I can spend 94,500. I have spent more. Spending more is bad. So this is adverse. 4,200 adverse. Okay. That's what I told you, Arundhati. The reason why that is happening is because the issuing is different and the purchase is different. Okay. So actually the situation is where there is a closing stock where you are buying some amount and you're using some amount. I have done that in the slides. You can go back and refer to it. In this question, I don't want to waste time doing with closing stock because that will take a lot more time. Understood? You have to be smart, guys. Now, you know that they have given you usage. Now, if you try to figure out how they got this usage, you can. There is a method for it. Closing stock. Go back and have a look. I will show you where the actual and standard will split into 2. Okay, and then you will have to do it separately. But the thing is, in this question, they are not even asking you for the figure. It's already given. So there is no point us wasting time doing that because if you do that, you won't have time for these other things. Okay, what did they ask you? They're asking you, is it adverse or is it favorable? Right? So if you can figure out a way just to decide, okay, this is adverse or it is favorable, that's more than enough. Understood? So don't overdo, because if you overdo, then what will happen? You will get the 1,925 in the question, but no point because it's already given. Purchased and used are different, exactly. Okay, I don't want to bring that in because like I said, closing stock, this purchase being one thing and used being something else is a situation where there is closing stock. I'll be honest with you, they rarely ask you to calculate with closing stock. That's why I don't want to even do that calculation and confuse you. That's why in this question, closing stock is there. They have, can you see, given you the answer because they don't want you to do with the closing stock. Okay. But if you want to, actually learn it properly, then yes, we have done this in class. You can go back and I have shared also how you will do it with the closing stock. Okay. Right. So labor efficiency is also done. Fixed overhead expenditure and fixed overhead volume. Okay. So both you have to do. Fixed overhead volume. Okay. So just the fixed overhead variances and we are done. Right. So fixed overheads, this is how it will look like. Actual, budgeted, and absorbed. Okay. Okay. Now, actual, it will be given to you in the question. There is no equation as such. For budgeted, we have, it's actually budgeted units into the standard FOAR per unit. And here it is actual units into the same standard FOAR per unit. Okay. Right. So let's see if they've given us the actual fixed overheads. Fixed production overheads, actual 72,490. It always has to be directly given. Budgeted units, we know it was 2,600. Standard fixed overhead absorption rate per unit, right? So go to the standards, fixed production overhead per unit, it is $25. So given to you directly. Okay, so you just have to put it there. Actual units was 2,700. Standard FOAR is again 25. So here the answer will be 65,000. And here it will be 67,500. Okay. So this is the fixed overhead expenditure. And this is the fixed overhead volume. Let me take the difference. $67,500 minus. Always take the bigger figure and subtract the smaller figure. You won't get negative answers, right? Right. So expenditure will decide if it is adverse or favorable, right? So according to the budget, I can spend 65,000. I have spent 72,000. I have spent more. That is bad, adverse. Okay. Now, with regard to volume, it's always tricky to decide whether it is adverse or favorable. I have told you, decide it based on whether you under-absorbed or whether you over-absorbed. Okay. So, if you look at this situation, according to the budget, I'm supposed to absorb 65,000. Actually, I have absorbed 67,500, meaning I have absorbed more. Okay. Meaning over-absorption. As a rule, I told you, remember, over-absorption means that is favorable. Don't think about the logic for this. I have spoken about the logic before, but for now, for exam technique, I'm telling you, if you have to calculate volume, check if it was an over-absorption or under-absorption. If it is over-absorption, it is favorable. If it is under-absorption, it is adverse. Okay, just remember it like that. Right. So 2,500 favorable. Right? In case there are students who didn't join my classes, I'll just give you the logic also quickly. It's like this. If you overabsorb, the correction that you do to reverse this overabsorption, it will result in your profit actually increasing. The correction that you do. So if your profit increases, it's good for you. So that's why we consider it favorable. Whereas if you underabsorbed, then the correction that you do to correct the underabsorption, it will result in your profit decreasing. If profit decreases, it's bad, no? So we call that adverse. Okay? Don't think about the logic too much. I'm telling you, in your exam, nobody's going to ask you why you chose an adverse or why you chose favorable. Okay? So let's put those two figures as well. So expenditure was 7,490. Adverse 2,000 favorable. Okay. Okay. Yeah, that's it. Okay. So now what we need is they want a total here. So they want you to basically add up all the variances and give a total here. I'll remove this from here. Okay. So they want a total here. Let me. Right. So what you do is, first figure out whether adverse is going to be bigger or favorable is going to be bigger. Clearly, since this 19,000 odd figure is there, adverse is only going to be bigger, right? So what you do, add all the adverse figures together. So 4,167, 19,748, 2,820, 4,200, and 7,490. Add them together and deduct the favorable figures. 1,925 and 2,500. Okay, so that will give you your total for the variances, which will be 34,000, and that was an adverse figure. Okay, so you can just put A here. 34,000 adverse. Okay. Now what you can do is, actually we can bring it to this column itself. Adverse. Right. So 182,500. Since this is adverse, you will basically have to deduct 182,500 minus 34,000. So you will get your total actual profit as 148,500. Okay, so that is the last blank that they're asking. So that's how you would do this entire question. So here we have actually done most of our variances. Is it clear, or do you have questions here? If you all have questions, let me know. Be careful with the variance question. See, just calculating it. They're not even asking anything. They're not asking any theory, nothing to confuse you. 10 solid marks. Okay, so always attempt it. Make sure you write the equations. That is only the key. Write the equation. That will help you. Okay, and the rest will fall into place. Okay, so I'll give you a minute if you want to take a picture or a screenshot of this. This is the answer basically, and these are all our workings. Okay, so this different from question. Okay, reason is because there was a difference in the amount that you purchased and the amount that you used, but don't waste time doing it with closing stock because they didn't ask. Okay, now this adverse or favorable will only be worth 0.5 marks. So no point us spending about 5-6 minutes just doing that. Yes, Asya, unlikely. Closing stock and idle time is unlikely. Sometimes some lecturers don't even teach it, but I don't want to leave that gap. So I just include it, but for the most part, you don't get. Okay. Yes, Arundhati. Okay, so let me just display this and give you a few tips and then we can call it a day, right? Okay, so first thing, Arundhati, you have to understand either you went for lectures recently or you went for it some time back. Okay, either way, the fact of the matter is that the sooner you finish your syllabus and the sooner you sit for your exam, the better your position will be, the better your mark will be. Okay, now I'm not saying sit for the exam tomorrow itself. Okay, I'm telling you, yes, take your time, make sure that you are positive. But the maximum amount of time that a normal human being can take to learn this paper is 1 month. More than 1 month, if you try to learn this paper, what will happen is you will forget what you already know. That's a very bad position to come to. It's actually a waste because, like, for example, 2-3 weeks down that learning time, you will be really good with certain areas, but because you're delaying your paper for some reason, you will end up losing what you actually know. So first thing is, the moment you are good with the mock papers, the moment you have done your revision kit, you know most of the questions, 80 to 90%, you're confident. The next step is to quickly book the exam and sit for it. Because I know a lot of students who delay this. The moment you delay it, mark my words, it will delay by not a few months, it will delay by years. There are people who have delayed this paper for 2 years because they are still not confident. Okay, so you also can see, Arundhati, because that is the problem with MA. It's not like FA, it's not like BT where you will figure it out and remember it. The issue is you will figure it out, you will be happy that day, you will be happy maybe for 1 week. After that, you will definitely forget. I'm telling you honestly, now I've been doing MA, right? But I think between this batch, that is the March batch, there was a 3-month gap for me. Okay, because I was focusing on FM at that period in January. I was focusing on FM for 3 months. I didn't take up an MA batch. It was coincidental. Okay. When I came back to it in March, I also had to brush up. I'm teaching this paper for almost 8 years now. Okay. But that will happen. You know, suddenly you will look at the standard hours for actual production and you can't remember what standard hours is. Understood? And then you will wonder, okay, what is this actual production figure? You will not be sure what happened. Then you will look at this volume and you will say, I can remember. It's a little different to calculate adverse or favorable for this. I can't remember how to figure it out. Okay. Then you will remember, yes, this can be split into 2, but I can't remember what those things are. It will happen. Reason is quantity is large. Okay. So because the quantity is large, you will face this situation. So that's what I'm saying. The moment you come to the position where you know 85 to 90%, go ahead, sit for it. Every question is unique, Arundhati, true, but you are not facing this paper only using past papers, right? Some people have that technique where they will only do the revision kit. Then you have to be scared. But now you have done the foundation of everything that you need to know. So basically, any question that they build, they have to build it based on whatever foundation you already know. Okay, so don't be worried about it. MA, 80% only you will know, 20% you won't know. They have designed the paper like that. Okay, so if there are a few questions that you don't know, simple, just guess and go ahead. Even if you guess, make a logical, rational guess. It might work out. Most of the time, it will work out for MA. Okay, especially when it comes to the theory-based MCQs. So first thing is you have to build up your confidence. You know your stuff, you know your equations, you know the techniques that you have to do. After that, it's just a matter of tackling the question one by one. So always, you know, when you read a question and you feel you're not sure what's happening, whatever you know about in that area, that's why for variances, I always say first write down the equation. Because the only thing that we know with regard to variances are equations. So first write the equation. That will make sense to you after that. While you're writing it, it will make sense. Okay, so whatever you know now, if it is to do with index numbers, just write down the equation first. After that, everything will fall into place. Okay, so that is the first thing. Okay, you have to be confident. And next, the most important thing is time management. Like I said, 80% of the paper you will know, 20 you won't know. If you're going to waste about 1 hour on the 20% that you don't know, then you won't have time to attempt stuff that you already know, which is a very bad position to be in. Okay, so remember, for every mark, you're allowed 1.8 minutes. Okay, so if it is worth 10 marks, ideally, you should spend less than 20 minutes. If you find yourself spending longer than that, especially for MCQs, just select something and go on. Okay, and even if you're not sure, before moving on, you can flag the question. Okay, meaning you can come back and check it, but select some answer and go, guys. Flag it to make sure that if you have time at the end of the paper, you can come back and check, but select something and go. Don't leave anything blank. If you leave it blank and go, chances are that you might forget to come back and select something. So you lose even, you know, there is a 25% chance that you will get the correct answer. There are only 4 answers. If you don't choose anything, it becomes 0%, right? So think of it logically. If you can't figure it out, guess it, but use a rational guess. But I'm telling you, 80% of your questions, if you have gone through your syllabus thoroughly, you should be able to figure it out. Okay, and to be honest with you, these mock papers are slightly on the tougher side. Your paper will be slightly less tough than this. Okay, but key is go through the entire revision kit, do all the questions at least 2 times, and make sure you remember what you do in the questions. Okay. Right, so that's it. It's not a complicated paper. It's actually one of the easiest papers that we can have. Don't worry about it. Enjoy it. That's what I will say. Finally, enjoy MA. The more you enjoy it, the better it will stick to you. And the better it will stick in your head. Okay, so while you're doing questions, enjoy it and do. Don't worry, right? Every question that you do until your exam, if there is something that you don't know, something that you are learning, that is a good thing. The only question where you shouldn't have a problem is the question that you do in your real exam. Understood? Have that mentality. Only the final question that I do in my exam paper, that I should know 100%. Before that, if there is any question that I don't know, it's getting wrong, that's always a good sign. because that means I'm learning something before my real exam. So in my real exam, if the same question comes, I know how to tackle it. Okay, so have that mentality all the time. Be positive. You can definitely pass this paper. Okay, right. So that's it from my end. If you guys have any questions, you can ask me. If not, we can wrap it up for the day. Okay, so all the best, guys. Don't delay. That's all I'm saying. Okay, within the next month, sit for it, finish it off. You also have a life. I also have a life. Enjoy life, right? Because no point delaying it with just an MA paper. It's not even worth it. There are papers you can delay in the future, not MA. Okay. No problem, Asia. All of you, if you have anything, you have my number. Always send me a message. But obviously, don't say that. Recently, I get messages where there's a whole MTQ. You have taken a picture of it and sent it to me and asked me, how am I to do this question? I'm wondering, how am I to explain this, right? Because it's a long question, right? So I can't type everything. So if you have a problem with an MTQ, exactly say which point you have the problem. Okay, this B part, this thing is an issue, then I can explain. If you ask me to explain the whole question, if I go to give you a reply to that, you will get confused. Understood? Right? Okay, then, those of you here, that's Arundhati, Asia, Dinelshi, and Sajid. All the best. Okay? Don't think that this is the end of the TRG and you won't have access. Anything, anytime, you can send me a message. Okay? Right, then, that's it for the day. Have a good night. Have a good week. And hopefully, I'll see you whenever I see you. Hopefully, at another skills level. Okay? No problem. Okay, good night.